maybe you guys can like turn on your cameras juga and like maybe introduce yourself a little bit too. Because I mean, most of you guys are like new faces. I also have like some of my student new class from Queens and from master class. So most of you guys are relatively new, but it's nice meeting you guys. Okay. All right. So can you guys just like comment in the chat box what is your expectation for this spring class? What do you hope to gain at the end of this spring class? Okay, maybe just comment in the chat box before we start. Okay, so Zulaika said answering skills. Okay, right and powerful techniques. Hi Carl. Okay, so right and powerful techniques. Okay, that's correct. Okay, basically I would say that this is the purpose of this spring class. Okay, so Ashikin pun said be more understanding about the answer and the exam skills, and I want to be more skillful in section B. Okay, so thank you for sharing all your thoughts. Okay, yeah, and most of you guys mainly want to pass your AA paper, right? Okay, so I want to break it to you guys. Also, during my studying time, I was also actually struggling with AA because at that time I felt like even though my answer was like super long, okay, I don't know if you guys have been in this position where like you guys like macam your answer is super long and then you feel like okay I can get marks here, but then when you actually get your actual progress test or whatever mock exam back, you realize that your answer too actually did not even get any marks. Have you guys been in that position? Because I felt like I was in that position too, where even though I did not leave anything within the question paper, but I still did not get marks. Okay, so yeah, Sarah pun said yes. Okay, this is a very relatable thing for all of us ACCA students. I feel like, but especially even more so in audit. Okay, it's a very common issue that we have, especially in answering our audit paper, because audit ni is very subjective. One, however, it's also because maybe the issue is that we are not applying our answer to the scenario. Okay, maybe our answer is too vague. Okay, this is especially for you guys who, I'm not sure about you guys, but if any of you guys are from degree or diploma background, okay, because you guys are kind of like, some of us are like used to this knowledge base, you know, where we just kind of like read and hafal whatever from our textbook, and then we just like churn out whatever answers on our answer sheet. So this doesn't work when we are answering our audit paper, because basically when we are not tailoring and applying it to the scenario, we will not be getting the marks. Okay, so throughout this spring class, I want to teach you guys how do we apply to the scenario, and how can we make audit easy and understandable. Okay, because I feel like now that I'm relearning audit as an educator instead of a student, I feel like I can see it more clearly juga. Things that I did not see when I was a student, when I was thinking like, wait, why macam my answer is so long but I'm not getting the marks at that time. But I feel like now that I'm seeing it as an educator, I feel like, oh, audit is actually not a hard paper. Because as long as you know the exam technique, inshallah, you will be able to pass. Okay, so I don't know, I'm sure that some of you guys, this is maybe not your first time taking audit. So I just want to like shout out to you guys. I know that it's not easy, especially when you've failed and like macam, you know, you have to go through the entire process again. So kudos to you guys. Inshallah, this will be the time that you guys pass. Okay, and congrats to all of you guys who are actually here trying to make this change for your future. Okay, so let's start. I'm just going to share my screen first. I need to connect my iPad. Can you guys see my screen? Yes.
Yes.
All right. Okay. Okay, so before we actually go into all that, okay, so this is more or less, have you guys actually seen this module? I hope that you guys have downloaded it from your Timba Flex. I have uploaded it. So you guys can just check this module out in your Timba Flex. This is basically what we will be using throughout this sprint session. However, macam, this is like the more basic questions. If let's say we have more time, then I will basically add on additional questions for us to attempt together in class. Okay. So just a little recap of like how the exam of AA looks like. Basically, MCQ will cover 30 marks here, and your section B will cover 70%. Okay, so our strategy is to focus on this 70% here. Okay, because here if you guys are able to answer this 70%, then because this 30% is unpredictable, okay, and they are all knowledge based. Okay, the only way that you guys can actually get through this 30% is through practicing your MCQs. Okay, so if you guys actually review the Timba Flex session pun, I have uploaded the study plan. On our last day, we will be covering MCQ questions. However, my main focus for this entire spring class is basically for us to gain more on this section B of 70%. Okay, so the section B, if you guys don't already know, is usually consisting of these three main areas, which is the audit risk, okay, which will actually comprise of 15 to 20%, internal control, and substantive procedures. Okay, so as long as you guys are able to master these three important parts, then inshallah passing will be easy for you guys. Okay, so I just want to bring you guys to the Timba Flex punya study plan in case you guys have not seen. Okay, so this is, I've already uploaded this in your Timba Flex. Okay, just jumping here. So today and tomorrow, we will be covering audit risk. Okay, okay, another thing that I want to just inform you guys, I'm planning to change this Wednesday class to this date here, 23rd of August instead. Is that okay, guys? So the replacement class will be on Wednesday. Okay, because I kind of want to cover like two audit risk macam in 1 week, internal control in 1 week, maybe SP in 1 week, and SP 2 days, internal control 2 days, and then last 2 days is basically on MCQ and whatever audit report. Okay, audit report opinion. Okay, so the replacement class will be on the 23rd instead. So this Wednesday we will not have class. Okay, so I'll just update this in the group just as a reminder also. Okay. Okay, Alias cakap I ada class FM that time. Okay, so if you guys think that Wednesday is not okay for you, do you have like any other date? Maybe I'll reconfirm on the date of the replacement if not. Okay, because some of you guys I think ada class clashing for spring class ni juga on this Wednesday. Okay, maybe kalau tak we do on the 25th perhaps. Okay, 25th is what day? 25th? Friday, right? Okay. So maybe we can do it on the 25th, okay? Because I feel like if today, this week kita nak buat audit risk, and then we do internal control, I feel like dia macam, and then suddenly next week kita continue internal control. Dia like, there's I feel like a gap there lah, okay? So this week again, a reminder, we do not have class on Wednesday, but we do have class tomorrow. So today and tomorrow, we will basically be covering on audit risk, okay? So going back to the module, okay, so other areas that we will cover. Okay, so usually kat sini it will be 70%, right? Okay, let's just say if even if let's say it's all like 15% audit risk, 15% internal control, and 15% on SP, basically that will be 45% here, and the remaining 25% will be here. However, it's very unlikely. Usually this area dekat atas ni is already at the minimum 50%. Okay, and then usually these other areas will be a maximum of 20%. Okay, so what are these other potential areas we will basically cover during the last few days of spring class? Okay, however, the most important is these three areas. Okay, so let's go through the answering technique for the audit risk before we actually attempt questions together. Okay, so first things first, okay, in your AA paper, the best part that you will miss this, okay, when you guys actually enter your P papers, is that just from this identification of your audit risk, from copy paste from the scenario pun you dah already get 0.5 marks. Okay, so I tell you, never ever leave anything for your audit exam. Okay, just if you not sure pun, you copy paste from the scenario pun, you can already get this 0.5 marks. Okay, so do not miss out on these marks here. Okay, so basically next is on the explanation. So this is where students will actually lose the points, okay, on how can we basically explain the audit risk. And this is where it is most crucial for us to kind of relate back to the scenario lah. Okay, so how I will usually divide this explanation in, the first point is basically I will talk about the direct explanation. And then after that, I want to talk about the impact to the financial statements. Okay, when I talk about the impact to the financial statements, what does this mean is basically we talk about which account, which specific area of the financial statements is being impacted. Okay, so for example here, if there is an issue relating to the research cost capitalization, okay, you cannot just say the asset is overstated. You have to say the specific areas, the specific account that is being affected, okay, for each of the audit risks. And is it an over or understatement? Okay, so in this case, it is an overstatement. So this sentence here is also very crucial because let's say if you just talk about the direct explanation of the scenario without talking about the impact to the financial statements, there is a gap. So you have to understand and answer both of this, okay? You have to talk about what is the direct explanation and what is the impact to the financial statements. Okay, so after this, we're going to go look into some questions and then we will see how we will apply this lah, okay? So this is just a review for kind of your own studies later on lah. If you are planning on like attempting your own questions, you guys can use this module juga. Okay, and another common error is basically candidates will confuse the auditor's response with the management's response. We have to again specify what is the auditor's response to this risk. Again, not what management has to do. We have to identify what do we as the auditors have to do. Okay. So another thing that we can talk about in this explanation of audit risk is the effect on the inherent, control, and detection risk. Okay, if you guys still remember, audit risk equals to inherent risk, control risk, and detection risk. Okay, so you guys have heard this equation, right? Okay, this is basically from your chapter 6, and this will actually be the fundamental thing, okay, especially when you are firstly starting an audit. This is the most important thing we will assess before determining whatever work that we are going to do. That's why audit risk identification usually comes first within the syllabus, because the first part is basically understanding what is the risk. If the company has a higher risk of material misstatements, then we will have to do more work or more detailed work. Okay, so basically, yeah, so this is pretty much it. Let's try to attempt questions together, okay? So I want to share from my laptop instead. So I hope that you guys can also like book up side by side so we can do it together in a way, okay? Another thing is, basically I want to do like a Padlet where basically, maybe some of it I will do, and then the other points, okay, the other points, I will want you guys to upload it on the Padlet and then I will mark this for you, okay? Because the issue sometimes is we are not sure if our point in, can we get marks for it or not, okay? So, okay, so I want to do the first question, the first question of Darjeeling Co. So, can I give you guys like 5 minutes to just go through this scenario? If most of you guys, I'm sure this is the first time you guys are actually seeing the module. So please look into the scenario yourself and I want you to highlight what are the deficiencies in internal control. Wait, let me just share it and then we will read through the instructions together. Okay, so this is the question on Darjeeling, okay? So the first thing that you guys do when you guys actually look into your question, okay, we will first go into reading the requirement, okay? So for each requirement here, I want you guys to highlight what is the verb, okay? Explain. So this seems like something that is very simple, but it is something that we overlook, okay? So what does it mean to explain, okay? When we are explaining, basically we have to give an explanation, a detailed explanation, okay? So we cannot just identify and give the main point. We have to give a detailed explanation or reasoning, okay? Because in this case, if they ask you to explain, that means that you will be getting 0.5 marks for the identification and 0.5 marks for the explanation, okay? And next, they're asking you to calculate 3 ratios, okay, which will assist you in planning the audit. Next, describe. Okay, this is the verb. Describe. Describe 8 audit risks and explain the auditor's response to each risk in planning the audit of Darjeeling Co. Describe SP the auditor should perform in relation to the faulty paint products held in inventory at the end. Okay, so SP ni, describing the substantive procedures ni, I think we will not be covering it today. Okay, so basically I want you guys to just focus on these three requirements first. Okay, so starting with the calculation of the ratios. Maybe AP ni will do it like last. Okay, so can I give you guys like maybe like 5 minutes for you guys to calculate these 3 ratios? Okay, actually they don't actually ask you what ratio, but I wanna give you guys lah. Okay, so first I want you guys to calculate GPM for both years, the receivable collection period, payables payment period, the current ratio. Okay, this is more than 3, but okay, this ratio is something very important. I also want to highlight to you guys that this has to be applied to your audit risk in the question. Okay, if you don't actually apply these ratios, that is when you will actually lose marks juga. Okay, so current ratio, receivables, and then lastly is right here, inventory holding period. Okay, so can you guys calculate these 5 ratios for both years of Darjeeling Co? Okay, so I'll give you guys 5 minutes and maybe I'll get back to you at now it's 8:13. Okay, so I will see you guys at 8:13, hopefully with these answers. you finish calculating, can you guys share your answers with me? Let me just share my screen again. Okay, so the first one is the GPM. And then we have receivable collection period, payables, payment period, inventory holding period, inventory holding period, and current ratio. Current ratio. Can you guys give me the answers? What is for the 2 years? So this is year 20x5, 20x4. Hello, can anyone give me the answer?
For me, yeah.
Okay. So what's the GPM for 20x5?
Forecast is 37.33.
7.33.
Actual is 36.43.
36.43. Okay, thank you. Next is receivable collection period is 51 days. 51 days. And then 38 days. Okay. Thank you, Iman. For payables, payment period is 58 days. And then 40 days. Inventory holding period is 54 days and 45 days. I terbalik Okay. Wait, hold up. I think I dah terbalik, right guys? Okay. So this should be 20x4. This should be 20x5. Am I correct? Yeah. So 37.3. Terbalik
Miss, betul dah tadi.
Okay. Alright. Okay, 54 days, 45 days. The current ratio is basically 1.65 and 3.08. Okay, so I advise you guys to actually include another column here, basically just for you guys to this is for your own use later lah. So we want to talk about the changes. In this case, there is an increase in GPM. Okay, there's an increase in GPM. There is an increase in the receivable collection period. Yeah, and then there is also an increase in your payment period. There is an increase in the inventory holding period, and there is a decrease in your current ratio. Okay, so why is this important? It's because we want to relate it in our answer later on. Okay, so it's very important for you to firstly understand what is the meaning of these ratios. Okay, so when we say the GPM has increased, it may be because the sales has increased or the cost has decreased. Okay, which actually caused the gross profit to increase. Okay, so if the receivable collection period has increased, this is basically, what is the risk here? Okay, that is a risk. What this means is basically the customer is taking longer to pay whatever outstanding debts. Okay, so this is just for your own reference. Before we go into the audit risk question, why is this important is because if you are unable to understand how you can, like, what is the meaning of these ratios, later on you will not automatically pick up on how we want to apply this to our scenario. Okay, so if there is an increase in payment period, okay, what does this mean, guys? Can somebody share what does it mean when the payables payment period has increased? And it's quite a significant increase from 40 to 58 days. Okay, what is the reason? What is an indicator that actually caused this increase in payable payment period?
Taking longer time to pay because of cash flow issue.
Yeah, we are taking longer time to pay because of cash flow issues. Okay, thank you. Yeah, so Alia also said cash flow deteriorate. It could be an indicator that. Okay, inventory holding period. When there is an increase in inventory holding period, okay, we have to automatically, our thought process is basically we want to think back about what is the risk here from these ratios. So if there is an increase in the inventory holding period, the risk is that basically the company is holding on to inventory for a longer period of time. This is where there is an audit risk that there may be obsolete stock. okay, if there is a decrease in your current ratio is a measure of the company's liquidity. Okay, so this can say that there is liquidity issues. Okay, basically the current asset has decreased lah, maybe like that. Okay, so this is just for your reference later on. Okay, okay, lama ada tekan toy the answers. Okay, so basically the next requirement they are asking you to describe 8 audit risks and explain. This is the second verb here. Explain the auditor's response. Okay, this is basically when you describe and explain the auditor's response. When we describe, they are basically telling you that you have to not just identify, but you have to identify and explain what is the implication of the risk to the audit, okay, to the audit of financial statements. This is what this verb here means, okay, when we are describing the audit risk. Similarly, they're asking us to explain the auditor's response. So when we say explain, the auditor's response must be complete and detailed. This means that we have to give the purpose. Why are we doing this? Okay. Why are we doing this audit response? What are we trying to achieve from this? Okay. So basically, I want you guys to kind of like prepare this table here on your answer plan, basically on the audit risk and the auditor's response like this. Okay, that's the first step here. Basically, you will, in this question, they ask for 8, right? Okay, so just create your own answer plan on the audit risk and the auditor's response, okay, before we actually go through the answer together. Just take a few minutes, maybe like, I'll give you guys 15 or maybe just 10 minutes, okay, for you guys to go through this scenario. Okay, copy paste pun okay je. Okay, just copy paste, basically copy paste and paste it to your answer plan, all the audit risks that you guys have found from this question. Is that okay? Okay, basically macam like I showed you guys here, an example is here. Right? This is my answer plan for the audit risk and the auditor's response. So all you have to do is just copy paste or summarize the audit risk that you have found from this scenario. Okay, so I'll give you guys 12 minutes lah, okay? So 8:35 we will basically discuss on this question. Okay, so again, highlight and copy paste into your answer plan. Okay, 12 minutes starts now. I'll see you at 8:35. Hi guys, I hope that you guys are completed. Okay, so these are basically the points that I have identified from this scenario. Okay, so have you guys gotten eight audit risks just from this scenario itself? Okay, there's actually another one that is not in this scenario. That is something we're going to look into after we're done with these 8. Okay, so let's basically discuss through the questions first, okay, before we go into the answer plan. Okay, so I feel like audit risk, it requires like for you to recap on your standards that you've learned in FR. So have you guys actually taken up FR? And you guys just like type in the chat just for me to kind of know that, to confirm that all of you guys have actually taken up financial reporting so that I am well aware on this. Okay, yes, all right. Okay, so most of you guys have obviously taken financial reporting, but yeah, I totally understand that sometimes we forget on the accounting standards. Okay, basically, I won't go too in depth on the accounting standards, so you will have to revise this yourself. But along the way here, we will basically recap on the most important ones yang will usually come up with in the exam. Okay, when we are doing audit risk questions, if you guys notice that if you guys have actually attempted a lot of past year questions, they are mostly the same. Okay, they will always bring up intangible asset. Another thing that they like to bring up is something on the credit terms to customers. Okay, this is also something they like to bring up on IAS 16. Okay, this is also a bonus point. Okay, undertake a stock exchange listing. Okay, there are some points that are basically repetitive. You will basically see a pattern that these kind of audit risks will come out often. So these are the ones that we want to capture. Okay, dalam maybe 8 of these audit risks, maybe 5 of them are actually something that is very repetitive that you've seen before. Usually only 3 will be something completely new. Okay, so I want you guys to focus your attention on these 5 that we have to get marks for these 5. Okay, so because the 3 sometimes we're like not so sure maybe can. Okay, so these 5 kena ada dalam tangan. Okay, so let's go through the first one. Like I said, intangible asset is also something that is very repetitive throughout the years. Okay, so what is the audit risk here? Is basically the risk that this intangible asset, okay, this research cost here, has it been incorrectly capitalized or not? Okay, some of which are in the early stages of their development cycle. Okay, if you guys remember, when we are talking about research, R&D, talking about R&D costs, they basically, in accordance to IAS 38, we have to meet with the pirate. Okay, only then we will be able to capitalize this. Okay, so P stands for probable inflow of FEB. I stands for intention to sell or use. A stands for ability to sell. What does R stand for, guys? Honestly, tak ingat. Okay, R stands for, T stands for technical feasibility. Okay, E stands for expenditure can be measured reliably. R stands for resources. Okay, basically the 3 M's. Alright, so basically let's talk about how are we going to talk about this. Okay, what is the thought process lah? Okay, so we have already copy paste this scenario here. The next step is we want to talk about the direct explanation. Okay, basically we want to talk about what does IAS 38 actually require us to do. Okay, what does IAS 38 require us to do, which is basically only costs, only research and development costs that meet these criteria should be capitalized and included within intangible asset. Okay, so basically the first step is to talk about what IAS 38 requires, and the next step is for us to talk about the which account is being over or understated. Okay, if this is not done, if it is not being capitalized as per IAS 38, which account in this case is being affected here? Okay, which account will be overstated? Can you guys type in the chat box just before we go to like actually answering the question? Which account will be overstated? Okay, yeah. So basically, it's not expense. Yeah, expense pun actually betul gak. However, it will be intangible asset will be overstated. Okay, if you guys are not sure on what account is being impacted, then think about the double entry. Okay, so or basically think about what are they supposed to do. Okay, if it is basically a revenue, if it is basically a research cost, if you guys still remember, this should be expensed off, correct? If it is basically a development cost, that actually meet this criteria under IAS 38, only then it will be capitalized as intangible asset. So if basically if this is actually a research cost, but they wrongly capitalized as intangible asset, then the intangible asset will be overstated and the research cost will be understated. Okay, so yeah, research cost will be understated. Okay, so the next point, all right, that is basically the flow for how you guys will be answering your questions. Okay, all costs incurred in the purchases and installation of the asset have been included within PPE. Okay, this includes the maintenance plan. Okay, now again, we talk about what is the requirement of IAS 16. Okay, we are not supposed to be including the maintenance plan. We should only bring out whatever, we should only include costs, only include direct costs that are directly attributable to bringing the asset to its working condition for its intended use. This is the IAS 16 definition. Okay, if you guys remember. So this is basically where we will talk about the IAS 16 requirement. Okay, only DC directly, only direct costs should be included, and this should not include the maintenance plan. Okay, and so if, okay, now we talk about what is the risk, okay? What is the risk to the specific account? If this maintenance plan has been wrongly included within the PPE, in this case, right? The maintenance plan has been wrongly included, then we talk about the PPE may be overstated. And basically this maintenance plan is supposed to be expensed off, right guys? So in this case, PPE may be overstated and the expenses understated. Alright, so next is on the borrowing cost. Okay, borrowing, the company borrowed 4 million from the bank, which is to be repaid in installment over 8 years and has an interest rate of 5%. Okay, so this is also a very repetitive kind of point. Okay, they will like to actually include this. Okay, so I would say that this first point here on the IAS 38 is something you guys have to understand. Okay, and this borrowing here and IAS 16. Okay, the company borrowed 4 million from the bank, which is to be repaid in installments over 8 years and has an interest rate of 5%. Usually there is two risks that we can talk about when there is a loan. Okay, the risk is that they are basically not classifying it correctly. Okay, so the first is the classification between NCL and CL. Okay, next is basically on the interest. Are they accounting for the interest or the finance charge accurately or not? Okay, and another thing is the disclosure that you guys can talk about. Okay. Next is the company is trying to undertake a stock exchange listing in the next 12 months. Okay, so why is this a risk? Okay, when the company intends to undertake a stock exchange listing, basically there is a higher risk that the company can actually commit fraud or manipulate the financial statements. Because the stock listing, they are basically bound by strict regulations. So they may have a risk of manipulating the financial statements. Okay, so when there is an audit risk on manipulating financial statements, okay, this is actually a bonus point because we will always know what to say for the auditor's response. Okay, if you guys notice, auditors, I think the issue for most people is that we don't know how to answer auditor's response. Isn't that correct? Especially for you guys who are not actually working, for students who are actually studying full time and this is your first time taking up audit, you basically don't know what document you want to look into, what procedure then. Okay, so when there is a possible manipulation or a fraud, it's a bonus point for us because when we are talking about the auditor's response, we can use this point of auditors should maintain professional skepticism. So this is my favorite point here because you cannot go wrong on this. Okay, so the next is basically on the credit terms to its customers. Okay, the company basically extended the credit terms. Okay, when they extend the credit terms, if you guys realize, and just now when we calculated the receivable collection period, it also increased. So we should include this in our answer. Okay, what is the risk? Okay, when we extend our credit terms to our customers, what is the risk, guys? There is basically a higher risk of irrecoverable debt, right? Okay, bad debts. Yeah, you guys are right. There may be an increase in bad debts or irrecoverable debt, right? Okay. So if basically this is not accounted for, then which account will be affected? There are two accounts affected here. Okay. It may be that the receivables may be overstated, and the bad debt or the allowance, or maybe like the bad debt, maybe the allowance for receivables may be understated. Okay, so this is basically the flow of how you will answer your question. Okay, so next is the customers who are able to prove that they could purchase the products cheaper elsewhere are asked to claim the difference within 1 month. Okay, so I think these last 3 points here, I will explain and do it with you guys for 6, 7, 8, 9. Okay, so just now basically we've discussed on 5 points. Okay, I've basically given you guys kind of like a summary of what is this and what is the explanation. So I want you guys to attempt it yourself first. Okay, just attempt on the explanation is actually enough. Okay, if you guys can, then put the auditor's approach. But if you can't, just leave it. Basically, I just want to see how you guys are answering or the explanation of this audit risk or these 5 points here. Okay, maybe these 4 points lah. Okay, so the first point is on the intangible asset. The second point is on the PPE. The third point is on the loan. The fourth point is on the stock exchange listing. All right. So can you guys just do these 4 points? I'll give you guys another 15 minutes to upload it in the Padlet. Okay. Just like you guys can just do it in orang punya Microsoft or whatever, and then save, and then you can upload it in the Padlet. Let me just share the link. Okay. So I've actually already shared the link in your Zoom punya chat box. So I want to give you guys 15 minutes, and then I want to review on how you guys are answering the explanation of the audit risk. Okay, for 1, 2, 3, and 4. Okay, up to this point on the stock exchange listing. All you have to do is basically just explain the audit risk. So, okay, I'll give you guys 12 minutes lah. Okay, I think 12 minutes, is it enough? Maybe I'll give 15 minutes lah. Okay, so we will discuss at 9:05. Okay, see you guys at 9:05. Okay, guys, time is up. Please submit your answers in the Padlet so we can review it together. Okay, maybe write your names sekali so I know, like, I know whose Padlet is this. Let me share my screen so we can look into it together. Okay, so let's look at Ain punya answer here. Okay. So the intangible asset account will be overstated, research cost will be understated. There is a risk of wrong classification between research and capitalization costs. Only the expenses that meet the criteria of IS38 should be capitalized. Okay, so your answer is like it's not wrong, but I just want to say that it's a bit like all over the place a bit. Okay, you have to follow kind of like a certain presentation. Okay, actually, I would say that kalau di Messi macam ni, like it's a bit harder lah. Okay, you should firstly start off with the first point is basically we copy paste from the scenario. Okay, and then basically we explain. Only then we go into which account is being over or understated. So dekat sini your way of answering is a bit like terbalik. Okay, so you should say yang only the expenses that meet the criteria should be capitalized. Okay, so that is what should go first. And then we talk about the risk of wrong classification. And then baru you go, the intangible asset will be overstated. Okay, however, this is your points are correct. So I will still give it 1 mark here. You just have to work on the presentation. Okay, think about it like your examiner will mostly macam they're humans juga. They obviously want to kind of like, it's easier for them to read if it is a clear presentation here, okay? PPE account may be overstated, expenses account may be understated. Okay, so only direct costs that directly attribute to the working of the asset in accordance to IAS 16 should be included in the PPE. Okay, so this point here, it is correct. However, basically, you will not be able to get marks from this. Okay, can you guys tell me why? Why do you guys think that we will not be able to get a mark from this? From this statement here. Yeah. From this statement, only the direct costs that directly attributable to the working of the asset in accordance to IAS 16 should be included in the PPE. This statement is correct, but you are not linking it to the scenario. Okay, the scenario talks about the training, about the servicing cost. So you have made no reference on this. So basically, the only thing that I could give you is probably 0.5 marks here. Okay, because you were not specific enough. Okay, but you were correct when you said the PPE account may be overstated and expenses may be understated. Okay, but you are basically missing out on that 0.5 marks because you did not include on the servicing cost that was already talked about in the scenario. There is a risk of wrong classification, the risk of finance charge being misstated. There is also a risk of disclosure not being made correctly. Okay, so this is correct, but again, I feel like you didn't really talk about what was given in the scenario. So this also I will give a 0.5 marks here. Okay, 0.5 marks because you didn't talk about how much is the finance charge. Okay, and yeah, so the risk of finance charge being misstated. Okay, there is a risk of fraud or manipulation to make it appear as good for the stock exchange listing. Okay, okay, I think this one I can actually give 1 mark. Okay, because basically they want to give the best looking SOFP and SOPL, right? Okay, so thank you for everyone who actually submitted their answers here. Okay, maybe I'll look into one more answer. Okay, so I think Haikal will answer. Okay, so maybe I won't be able to cover all of your answers, but maybe just try to like leave. Okay, if I don't mark it in class, maybe I can mark it after class. Okay, so just continue to post your answers in the Padlet. I'll try my best to mark as much as I can. Okay, so during the year, okay, blah, blah, blah. So this one is copy paste from the scenario. Just sini pun you get 0.5 marks. Okay, which can be classified is usually containing item which can be classified as expense in the current year financial statement. It tends to understate research costs at 0.9 million and overstate intangible asset. Okay, you didn't make a reference on what does IAS 38 require. Okay, so dekat situ you have actually lost your 0.5 marks, even though your point here that there is an possible understatement of the cost and the overstatement of intangible asset. This point here is correct, but you did not talk about what IAS 38 requires. okay, you talked about the early stage is usually containing item which can be classified as expense. For example, research cost. So this is actually quite general. You didn't talk about the IS 38, and I feel like you didn't really feel like you related, but you didn't like talk about the requirements as per IS 38. Okay, so kat sini you only get 0.5 marks. All costs incurred in the purchase and installation have been included within PPE. Okay, according the cost can be capitalized if it meets the definition under IS 816. Okay. Right now, we're not talking about the definition sangat. The issue is basically they may be including, the issue is that they may be including the costs that are not directly attributable. Okay, so if all costs has been capitalized, it tend to overstate PPE and expenses in the current year and tend to understate expenses. So dekat sini pun, I will basically give only 0.5 marks. Okay. Okay, how does it, how do we know that it meets the definition under IS 16 or not? Okay, so I will show you guys my sample answer after this. I want you guys to take a look in your answer again and compare it to my answer in like how it is, basically how am I applying it, okay? These capitalized costs include the purchase price. Oh, yelah, ini continuation lah ni. Okay, sorry, I tak perasan. Okay. These capitalized costs include the purchase price. Does not meet the, okay, so this is correct, okay? This is 0.5 marks. Okay, however, your point here is a bit long, okay? Basically, I can tell you that this paragraph here, you will not actually really get any mark pun. Okay, the only reason why I give you 0.5 mark is kat atas ni. So you can actually omit this. Okay, again, our issue as even when I was a student, I get overexcited when I am writing on the requirements of the IS 16. However, we don't want to waste our time in actually churning out what IS 16 requires without application to the scenario. Okay, so kat sini pun is actually sufficient enough. That you said 5-year servicing and maintenance plan does not meet the definition under capital expenditure as per IAS 16. So this point yang down here is already enough for you to get 1 mark. Okay, so 0.5 marks. This is 1 mark. You can basically just omit whatever paragraph here. Okay. Repayment of bank loan are currently more than 1 year accounting period. Therefore, this tends to be the risk that management only record value of loan in non-current asset despite recognized also in current liability. Therefore, current liability tend to be overstated. Okay, your answer is correct, is 1 mark. I can give you 1 mark. But I feel like, okay, I want to show you how we can make this more simple and short. Okay, we don't have to make it long for us to get the mark. Sometimes when you actually buat your answer very long, yang you're not answering the question pun is actually a problem juga. Okay, this tend to increase the risk of manipulation, okay, in order to record favorable amount of net profit in the current year. Okay, so this is also correct. Okay, however, your presentation, okay, I want to show you guys. Okay, so I'm sorry for the others yang I tak sempat cover. Okay, maybe next time I'll like choose someone else pula. Okay, so let me share my screen on how I actually attempted my answers. Okay, just for the explanation. Okay, so the first point here kan. Okay, this is how I want you guys to try practicing your presentation of your audit risk. Okay, I mean you guys don't have to break it down like this, like R dot explanation of R dot dot. Okay, but this is basically how I kind of want my students to learn on how to clearly present this, not only for the examiner but also for you. Okay, so this point here I just summarized it from the scenario. Okay, and then next I talk about the explanation of what IAS 38 requires. Okay, you don't have to make it very long. Okay, requires that only development costs which meet the capitalization criteria should be included. Research costs should be expensed off to the SOPL. Okay, and then basically we want to talk about the impact. What is the impact if we are not meeting this requirement of the standard? If the development costs are wrongly capitalized instead of expensed off, there is a risk that the intangible asset and profit may be overstated and expenses may be understated. Okay, do you guys see how I try to present it in this way? Because let's say if you omit this point here, okay, and then you only talk about the impact here, the risk that IA and profit may be overstated, and if you only talk about either one of this, then basically you will not be applying to the scenario and then you will not be getting that 0.5 marks. Okay, so presentation is more or less of for you guys at the end of the day, because then you guys will be able to see where you have possibly missed out on. Okay, yang impact to financial statements ni, we want to talk about which specific area is being impacted. Okay, and for the next point, all costs incurred on the purchase and installation have been included within PPE, including the 5-year servicing. Okay, so we talk about what does IAS 16 state. Okay, IAS 16 states that costs that are not directly attributable to bringing the asset to its working condition should not be included within the cost of the asset. So I made a reference to the 5-year servicing and maintenance plan. And I talk about what we should be doing to this. We should be charging it or expensing it off to SOPL over the period of 5 years. And basically, again, what specific area of the financial statement is being affected. Okay, so you guys don't have to make your answer very, very long. Okay, try, even like in audit point, try to keep it as simple as possible as long as you guys get straight to the point. Okay, so for here point, you can talk about there is a risk that the loan is not being split correctly and there is an insufficient disclosure, or we can talk about the finance cost, finance charge. Okay, there is a risk that the finance charge has been omitted, so the finance cost may be understated. Okay, lastly is on the stock exchange listing. Okay, developing new products. Okay, so Darjeeling may have to meet. Okay, so this is something yang very copy paste juga. Okay, when there is a stock exchange listing, or even let's say if the company is trying to obtain funding, for example. Okay, so we can say that they will have to present financial statements which show the best position and performance. So there is a higher or increased risk of directors manipulating the financial statements by what? They may overstate the revenue, profit and asset, and understate its cost and liability. Okay, so far so good, guys. Okay. So, okay, for the auditor's approach, I will not be going into detail on the full sentence, but I will just like maybe macam explain a bit of what is it that we want to look into. Okay, the auditor's response ni, you have to cater it or tailor it basically to your audit risk. Okay, we have to think about how are we going to tackle this specific audit risk. Okay, it has to be related. So in this case, kan, we are first point here yang IAS 38 intangible asset kan. The issue right now is that they are not meeting the capitalization criteria. So what is the auditor's response is basically we want to check, are they actually meeting this capitalization criteria or not? So we will obtain a breakdown of the expenditure. Obtain a breakdown, intangible asset, and verify that it relates to development of the new product. And maybe we can review the supporting documentations. Okay, for intangible asset, maybe they have like some kind of agreements or invoices to determine the costs which relate to research or development. Okay, and then lastly, we want to discuss the accounting treatment with the FD maybe. Okay, we will ask them why did they maybe include this. Okay, so discuss the accounting treatment and ensure it is in accordance with IAS 38. Okay, so for the auditor's response, I feel like it's something that you guys have to just attempt a lot of questions for you guys to get a hang of how to answer this, especially if you guys don't have the experience. Okay, but intangible asset ni pun, it's usually the same thing. We will obtain a breakdown of the intangible asset expenditure or whatever schedule of intangible asset expenditure, and the purpose of this. We want to verify that it relates to the development of the new project, or basically does it meet the capitalization criteria. Okay, so next point here is basically on the maintenance plan, right? Okay, so what can we look into, guys? Okay, we will basically, similarly, we will look into whatever supporting documentations. Okay, so first we will basically review the purchase documentation, such as invoices, for the manufacturing line. Okay, to confirm the exact cost. Confirm the cost valuation of the PPE. Okay, right? Maybe we can also discuss with the FD because they have wrongly included the servicing and maintenance plans. We want to discuss with the FD the correct treatment of the service and maintenance plan and confirm that necessary adjustments are being made to exclude the plan from the cost of the asset and expensing it off to SOPL. Okay. Next is on the loan. Okay, so this is also my favorite because basically the risk is that the loan is not being split correctly, right? Basically a classification risk. Then we can just recalculate the split between NCL and CL. Okay, so it's relatively quite simple. Okay, we want to recalculate the split. Next is maybe we want to review whether the cash has been received or not. Okay, so we will basically want to review the we want to confirm whether the amount of 4 million has been received by reviewing the cash book and bank statements. Okay, another thing is basically on the finance charge, right? The finance charge pun we can also recalculate the finance charge. Okay, and basically look into the compare with the loan agreement, the terms on the loan agreement. Okay. Next is on the developing of the new products. Okay, so this is, like I said, something that actually is repetitive. Okay, for the other ones, we may not be so sure on the auditor's approach, but for when there is an issue on a potential risk of manipulation or fraud, this is a standard answer that you can always use. Okay, so basically, Darjeeling, kita ELCO or the audit team should ensure, should basically exercise professional skepticism and be alert to the increased risk of manipulation. Okay, due to the strict stock exchange listing requirements. Okay, so first is we have to exercise professional skepticism and be alert. Second, we want to talk about we have to allocate more time and a more experienced team. Okay, ensure that a suitably experienced team does allocate more time. Okay, to obtain understanding of business and their ROMM. ROMM is basically risk of material misstatement. Okay, so for the auditor's approach ni, I don't want to go into so detail on it. Okay, I will basically just write the main points. Okay, but after this, maybe I kind of want to focus more on the exam technique here. Alright, okay. So it offered extended credit terms to its customer on the condition that their sales order quantities were increased. Okay, so for the explanation here kan, okay, according to what we've been learning just now, right? It offered extended credit terms to its customers on the condition that their sales order quantities were increased. So what is the explanation here? Okay, remember, there may be a higher risk of irrecoverable debts. Okay, so what is the impact to the financial statements, guys? In this case, which account is being affected? Can you guys answer in the chat box? Okay. Receivable collection period has increased from how many days to how many days? Okay. Remember to try to relate what the ratio that we've used. Okay. So Sarah said allowance. Okay. Receivables, allowance for receivables, and profit. That's correct, guys. Okay. So we can say implication there is basically the receivables may be overstated, allowances may be understated, allowance for receivables, and profit may be overstated juga. Okay, so yeah, this is basically how you guys want to actually answer this. Okay, so I've actually, if you guys notice here in this point, I've related to the ratio. Okay, this is very important because overall, if you do not really include the ratio, I think they will cut off marks from your overall. Okay, so dekat situ you should not miss out on these points lah. Okay, so what I would usually do is basically go back here and to kind of like tick to make sure that all your ratios that you guys have actually written, okay, maybe macam just like put your own reference that this has been used. Okay, at least once this point here has been used. Okay. So back to our point just now. Okay, I hope that you guys are doing this together with me, not just watching me, because I think that kalau you guys don't do it together, then you won't be able to really see it. Okay. So this credit customer punya answer ni juga, for the auditor's response, is the same thing over and over and over again. Okay, we basically, first point is we want to review the trade debtor or trade receivables analysis or report. Okay, trade debtor aging analysis, aged. Okay, aged trade debtor receivable analysis. Okay, basically, if you guys know, I'm sure that you guys already know, I hope that you guys know, this aged receivables analysis basically will like state for each of the receivables, how long have they been owing to us and what is our balance. Okay, so usually akan tunjuk lah 0 to 30 days, 31 to 60 days. So this document is actually very important, not just in your audit approach punya answer, but this is something that we will look into even when we are doing the substantive procedure. We will actually really look into this. This is actually a very reliable form of audit evidence. We review the age trade debtor or receivable analysis to identify outstanding receivable balances, and then basically, okay, this cannot come alone. This cannot stand alone. We cannot just review and not do anything about it. We will discuss this with the credit controller. Okay, we will discuss to kind of understand whether these amounts can it be collected or not. Okay, so we want to know the likelihood of customer paying the balances due, and basically whether the allowances are sufficient or not. Okay, and then another important point is we want to do extended post year-end cash receipt testing. Okay, so how does this work is basically we want to see, okay, what we will do is basically post year-end, we will look into their cash book and their bank statement to kind of confirm, okay, whether eventually did the customer actually make payment or not. So this is basically to kind of confirm the adequacy of the allowances for receivables. Okay, so these 2 points are very important juga. Okay, so next is on the price promise. Okay, made an announcement for its price promise. Okay, let me share my screen to my iPad because I want to explain this in more detail, because this is also something yang is a bit trickier. Okay, they like to talk about IFRS 15 tau actually. So when they bring in IFRS 15 revenue, that revenue from contracts with customers, that is where it can get a bit tricky. So let's do a little bit recap lah juga on this product recall. Okay, hold on, let me just share my screen. So the next point here is basically on the extend credit terms done. Okay, so point number 6 here, right? Customers who are able to prove that they could purchase the products cheaper can basically claim this amount. So this kind of works as a sale with a right of return, as per IAS 15, sale with a right of return. Okay. So when there is a sale with a right of return, just a recap, if you guys still remember, we will basically firstly recognize revenue. Okay. However, we will only recognize revenue up to the amount which we expect to receive. Okay. Up to the amount we expect will not be returned. Okay, and then basically we will recognize a refund liability. Okay, refund liability will be basically the estimated returns that we will recognize. Okay, so yeah, basically we have to make sure that the company is actually accounting for this correctly. Okay, they will basically, for example, in this case, if the revenue, let's say, is 10,000, the sales that is being made is 10,000. Okay, but from this 10,000, we expect a return of 2,000. So basically, we will only recognize 8,000 in revenue. Okay, the 2,000, we will create a refund liability. Okay, guys? So this is something we have to make sure the company is accounting for correctly. This is an explanation for sale with right of return. Next point is basically on the product recall. When there is a product recall, okay, basically the same thing you got here. Okay, whether sales have been stopped and product recall has been initiated for any of these specific paint products sold since June. So we have to make sure that they have actually accounted for this accordingly or not. Okay. So basically, this is where sales return will come in. Okay. Lastly is on the rectification and subsequently sold. So this is, we talk about the IAS 2 requirements. So what does IAS 2 state, guys? This is also a famous standard that is always asked. Okay, as per IAS 2, inventory should be measured at lower of cost and NRV, right? Okay, so we're going to talk about that. Okay, if it can be rectified and subsequently sold, we have to make sure that they are basically writing it down or writing it off to the lower of cost and NRV. Okay, if this is not done, then basically it is the inventory that may be overstated, and then the expenses understated. Okay, so let me share my screen again. Okay, let's complete this, and then maybe we can go for like a short 10 minutes break before we continue the next question. Okay, so next is basically on the price promise. Okay, let's talk about the explanation. So right now the issue is that this refund liability is more or less of just an estimation, right? So basically this is where it is very subjective. Okay, all right, in accordance to IFRS 15, revenue from contracts with customer, the revenue recognized should not exclude the estimated or expected level of claims from customer. Okay, so this is basically very subjective. Okay, so the impact is there is a risk that refund liability. Okay, before that, let's talk about, as this is a highly subjective area, there is a risk that refund liability may be understated and revenue may be overstated. Okay, this may not be done by the management of Darjeeling Co, as this is a new initiative that has not been introduced before. Okay, they may not have the experience on this. Okay, so maybe what we can do is we want to discuss with the management on the basis of how do they calculate the 0.25. And then we want to confirm, obtain supporting documents to confirm the reasonableness of the refund liability. Okay, can you explain on refund liability again, like how we record it? Okay, I want to give like a more detailed explanation or like maybe an example. Let me like find an example for this promise price. Okay, because dia macam a bit more complex. Okay, so actually let me just share the screen. So here is an example. Okay, sale with a right of return is basically a right that enables the customer to receive a partial or full refund, a product exchange, or a credit in amount owed. Okay, so for example, okay, this is basically the requirements under IFRS 15. Okay, an example is seller sells 100 items for $10 with the cost per item of $8. Okay, so in that case, the profit is $2 per unit, right? Okay, so there is 100 items, $10 each with the cost item of $8. So this expected return is 12 items. Okay, so these are the three things that we have to do to account for this sale with a right of return. We basically firstly have to recognize a revenue, a refund liability, and an asset and an adjustment to cost of sales. Okay, so I would say that usually they don't really ask on the asset and the adjustment to cost of sales, okay guys, because this is a bit more detailed. Okay, so this is an example right now. Okay, retailer B sells 100 products. Okay, this is kind of how H&M works actually. If we try to relate it to the real world, and if you guys actually buy anything from H&M or Uniqlo, you guys can actually like return it within 30 days now. So like this is how H&M will actually recognize their revenue juga. They sell 100 products at a price of 100 each. Customer can return items within 30 days and receive full refund in cash. Okay, so the cost per unit is 60. The estimated return is 3 products. Basically, within these 30 days, we will make sure that we only recognize revenue excluding this estimated return of 3 products. Okay, so the first step is we want to recognize the sales as at this date, okay, when they sell these 100 products. Okay, even though we receive 10,000, this is basically 100 times $100, okay, And then basically, we will only credit revenue. Okay, we will basically exclude the estimated returns. Okay, so we will only recognize a revenue of 9,700. The balance of 300, which is the 3 items here, will be recognized under a refund liability. Okay, so this is how we will account for a sale with a right of return. Okay, next is basically we want to recognize a cost of sales. Okay, I think that I don't want to go too detailed into this. I think as long as you guys know that this is how we recognize a sale with a right of return, because if we go into too detail, this is actually SBR down here. Okay, I think that's why you guys are not so sure on this. Okay, FR, they don't really go in detail on this, betul tak? Okay, however, as long as you guys know that we have to recognize a refund liability. Okay, usually, okay, if we cancel this, finally at the end of the day, let's say, after the 30 days period has expired, okay, we will basically recognize the refund for 2 items. Let's say 2 of the items have been refunded. Okay, so just now we have already created a refund liability of 300. This consists of 3 items. However, if only 2 items are being refunded by the customer, we will only debit refund liability for the 2 items here. Okay, credit cash. And then we want to recognize the revenue for the 1 item that is not returned. Is basically we will debit refund liability and we will credit revenue. Okay, this point here is important. Basically, once the 30 days have passed, the 30 days have expired, only then you can account for the ones that have not been returned as revenue. Okay, I think that you guys don't have to go through so detailed in this. Okay, as long as you understand this part here, that we basically have to recognize a revenue to exclude the estimated returns, okay, of 3 products, and then we will basically recognize the refund liability for the 3 products, which is 3 items times the 100 price, and then eventually, at the end of the day, what will we account for when the products have been returned? Okay, if the products have been returned, we will debit refund liability, credit cash. Okay, second, if the items have not been returned, okay, even though we have like allocated 3 items being returned, kan, we will basically like only 2 have been returned. So 1 2 has not been returned. Then we will debit the refund liability, and then only then we will credit the revenue on this amount. Okay, you guys understand so far? Because this is, I feel like a bit more difficult. It's just this part, right? Yang lain semua actually macam you've probably seen it before. Okay, so, alright. So going back to the question. So going back to the question here, we discussed with management. Okay. Jadi like that. Okay. Discuss with management on the basis, and next is on the faulty paint product sold. Okay. So what is our explanation? This one point is actually related to the product refund juga. Okay. When there is a refund, how will we basically account for this? Okay. So basically, the explanation. This product recall will cause Darjeeling to have to pay refunds to customers. Okay, so what are we supposed to do is basically we will exclude this from the punya revenue, and then we will basically include a refund liability for this. Okay, so whenever there is a product recall, this is also involving refund liability. Okay, this product recall will cause Darjeeling to have to pay refunds to customers. Thus, the sales should be removed and a refund liability should be recognized. Okay, so failing to do so, if company fail to do this, there will be an overstatement of your revenue or sales and understatement of the refund liability. Okay? You guys get it so far? Okay, what can we do is basically maybe we want to discuss with the management. Okay, the difference between answering for auditor's approach and the SP is that auditor's approach is more general. It's more general. You don't have to go in depth as compared to SP. But if let's say macam, so I feel like if you are strong in answering your SP, it will actually help you in answering your auditor's approach juga. Okay, basically we want to obtain and review the list of sales of products Okay, kat sini from when to when. The product is from have been made. Okay, obtain and review the list of sales of products, of paint products sold in June 20x5. This is from the scenario, okay? Try to make sure you guys apply to the scenario. Okay, so Alia asked if we put a point yang number of these faulty points have been sold under IS2, okay? So I actually was going to get into that in the next point here. This is actually a separate point. This product recall is a separate point as the apa yang can be rectified and subsequently sold ni is a separate point. Okay, so if you tak explain on this, then you talk kat sini lah. So I've purposely separated it because it's two different points. Okay, so we want to review the list of sales of paint products sold in June. So between June and the date of the recall, agree that sales have been removed from revenue and refund liability has been recognized for the refunds to customers. Okay. Okay. Next is on the faulty products. This is basically where we want to bring in your IS2. Okay. Another thing that we can talk about is actually on the kat sini kan, management investigating whether the paint consistency can be rectified and subsequently sold. We can bring in the inventory holding period because basically they have been holding on this inventory for a long period of time. Okay, so let's use this point here in our answer. Okay, so somebody asked for auditor's response should be buat satu or lebih. Okay, if you do one, complete auditor's response pun you already get 1 mark. So, okay, whatever it is, just come up with one. But I would say that kalau boleh just put more. If you have more time, just put more because it may be that your auditor's approach to is not correct, right? But basically, how they will actually mark for this is like this 1 point pun dah dapat 1 mark. Okay, so however, just try to give more lah in case. Okay, so next point is on the IS2. Okay, we will talk about what this IS2 say. Okay, and then explanation we want to talk about the inventory holding period has also increased. Increased from how many days to how many days? Okay. Okay, IS2 requires inventory to be measured at lower of cost and NRV, right? However, okay, in this case, it may be that the risk is that they are not writing it down to the cost and NRV. Okay, requires a write down to the lower of cost or NRV. Bukan. IS2 states that inventory should be measured at lower of cost and NRV if the paint products can be rectified and sold. Okay, the inventory should be written down to its NRV if the paint products can no longer be sold, can no longer be rectified and sold. The inventory should be written off terus. Okay, I think this statement here, even if you don't include pun, is fine. Okay, as per IS2. Okay, if the paint products can be rectified and sold, the inventory should be written down to its NRV. If the paint products can no longer be rectified, the inventory should be written off. So what is the risk, guys, if they are not doing this? What is the implication? Okay? Basically, the implication is that the inventory may be overstated and the write-off expenses, right? The write-off expenses may be understated. Inventory and profit may be overstated, expenses may be. Okay, so this one pun, I want you guys to really hafal the auditor's approach because IS2 ni comes out a lot. Okay, so every time there is an issue on IS2 punya course, what we will want to do is basically we want to firstly discuss with FD whether any write-downs will be made. Okay, this one relates more to the scenario lah. So this product modifications will be required. Okay, so the more usual answer kan is detailed testing of the cost and NRV of the faulty products to confirm that on a line-by-line basis, inventory is valued accurately or correctly. Okay, so this is a very typical answer for when we're talking about IS2. Detailed testing of the cost and NRV to confirm that on a line-by-line basis, inventory is valued accurately. Okay, so another point that is not actually very obvious from this scenario is now I'm talking about the ratios here. Okay, the payable payment period has increased, the current ratio has decreased, the quick ratio has decreased, and bank balance has moved from 0.56 million to an overdraft. I don't know if you guys noticed this. Okay, that it basically moved from a positive balance to a negative balance. Okay, so how can I basically use this as a point? Okay, we want to talk about the going concern. Okay, that's why it's very important for you to analyze the ratios properly, because this will actually help you in answering your audit risk question. Okay, so the explanation are, these are indicators that may show that company is experiencing cash flow difficulties. This could affect the company's ability as a going concern. Okay, basically it may be that they have to liquidate or they are unable to operate in the foreseeable future. Okay, so if there is a material uncertainty, okay, this is something we're going to look on the last day. If there is a material uncertainty on the going concern status, means that there is any issues that can actually show that the company is no longer a going concern, this has to be disclosed. So we can talk about the impact is if this uncertainty regarding the going concern status is not adequately disclosed, there is basically insufficient disclosure. Basically, they will not be meeting the regulation lah. There will be a lack of disclosure or material uncertainty. Okay, maybe that's what I can say. Alright, basically what we will do is a going concern testing. Detailed going concern testing, basically, which will include the review of cash flow forecasts. Because right now we're saying the cash flow is being impacted, right? They are having cash flow difficulties. So we will review the cash flow forecast and the underlying assumptions. Okay, basically the assumptions that the management has in actually calculating and creating this forecast. Okay, and then we want to discuss with management whether their assessment on the going concern is reasonable or not. Okay, so yeah, we have completed the first question. Okay, alright, so far so good, guys. Can we take like a 10-minute break before we continue on to the next question? Okay, for the next question, I kind of want us to just discuss a little bit, and then I want you guys to try to attempt yourself, and then basically I will mark through your answers. Okay, so see you guys at 10:10. Alright. Okay, hi guys. Now it's 10:10, so I hope you guys are back from your break. Okay, so let's just discuss together. Okay, my plan is that tonight we will cover this question. Okay, we will basically discuss on this question, and maybe tomorrow we can try to attempt 2 or 3 questions. Okay, so today let's just finish off this one last question. Okay, we'll usually take up about an hour juga for the discussion and all that, right? Okay, so let's firstly look into the requirement. Okay, so kat sini I actually don't know why I couldn't find any information on the like calculation of the ratio. Okay, maybe like I copy paste the questions tu macam the ratio tu like I didn't copy paste sekali and I couldn't find the original question. So for the ratio, I will just give you guys the answer for the ratio. Okay. So next is describe 8 audit risks. Again, the verb is describe. Okay. When we are describing, basically we want to firstly identify from the scenario, and then we want to explain the implication. What's the impact to the business? Okay. The impact to the financial statements. Okay. Explain the auditor's response. When we want to talk about the explanation, we want to think about the purpose. Why are we basically doing this in the first place? Okay. And after that is SP. SP is something that we're going to cover in our, not next week. Next week we'll be covering internal control. The week after that, we will be covering on your SP. Okay. So let's look into this scenario together. It is 1 July 20x5, blah, 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 blah. Okay. Next is basically the first point is Orlando sells approximately 30% of its products to wholesale customer. The customers purchase goods on a sale or return basis. Okay, so this is something similar to the last point just now that I have explained to you guys. So I don't know why they basically like to talk about this sale or return basis a lot when they bring up IFRS 15. So I hope that you guys can attempt this juga, okay, after this. So we talk about that basically there is 40 days and then the estimated return rate. Okay, the finance director feels this is unnecessary and has removed this provision for the year. Okay, again, just to recap, if there is a sale with a right of return, how will we account for this? We will basically only recognize a revenue. We will only recognize a revenue up to the amount, which will basically exclude whatever estimated returns. Okay, and then basically we will recognize a refund liability. Okay, for the estimated returns. So in this case, the FP feels that it is unnecessary and they have basically removed the provision. That means they did not actually recognize this refund liability here. Okay, so your process is basically you have to state what the company should be doing here, which is recognizing the refund liability. And so since they are not accounting for this, then basically which account is being affected here, guys? Okay, if it is not provided for, then basically the refund liability may be understated and the revenue may be overstated. Okay, so this is your answer. It's going to look a little bit like this. Next is on the purchase of a patent, which was capitalized as an intangible asset. Okay, basically in accordance to IAS 38, whatever patents that meet the recognition criteria, okay, that basically there is a probable inflow of FEB, this should be recognized, right? Probable inflow of FEB. So the first criteria is basically the recognition criteria is probable inflow of FEB. And second is basically it can be measured reliably. Okay, so basically we want to talk about IAS 38 and whether they have actually accounted for this correctly or not. Okay, it's 500,000. Okay, they have capitalized it. Basically now we want to check whether they have accounted for the amortization. So there's 2 things that you want to talk about here. Basically on the correct accounting of the intangible asset and basically the amortization cost. Okay, so if they did not amortize it over the 5 years, then basically we will have to, then basically the profit will be overstated. Profit and IA overstated. And basically the amortization expenses is understated. Okay, next is on the new machinery, right? Okay, the new machinery was purchased and installed on 1st October and includes the installation and training. This should not include training, right? As per IS 16, we should only, this is the same point, okay? We will basically include directly attributable costs only, which are attributable to bringing the asset to its working condition. Okay, so this is the third point here. Okay, this is 1, this is 2, this is the third point. Orlando has conducted an inventory review and found some product lines are not selling well since the new product has been launched. There has been no adjustment to inventory in relation to this. Okay, so there has been no adjustment to inventory in relation to this, okay? It may be, according to IS2, we are supposed to, if the new product lines are not selling well, basically in accordance to IS2, we have to write down to the lower of cost or NRV, right? So if they are not doing this, then basically inventory may be overstated and basically expenses may be understated. So this is the fourth point. Okay, and next is basically the financial controller was dismissed after creating fraudulent transactions. Okay, so this is number 5. This is where we will basically repeat the same point. Okay, we as the auditors will remain alert and maintain professional skepticism. You guys remember? It's the same explanation because there is a risk of manipulation and fraud here. Okay, next is the legal action for unfair dismissal. Okay, this is basically where we will have to talk about IS 37. Okay, so I don't know if you guys have actually, do you guys still remember IS 37? IS 37 is a very, very important standard. Okay, so if I want to kind of conclude and like give you guys what is the most important point of IS 37, let me show you guys through this box here. Okay, so if I were to like draw a box here, let me just do it like this here. IS 37. Okay, as long as you guys kind of remember this box, it's actually good. Okay, so basically we have the accounting treatment, and let's say if there is an asset and then a liability. So there's 4 possibilities here. Okay, if it is virtually certain, if it is probable, it is possible, and lastly, if the possibility is remote. So I hope that you guys can copy down this table because I feel like it can actually be very useful in like, not only in AA, but I think in any other subject board because IS 37 is something that you see across different subjects. Okay, so basically if the asset, okay, the asset for example lah kan, if we are expected to receive money from an insurance company, okay, if it is virtually certain, only then we will basically recognize as asset. Okay. Similarly, for a liability pun, we will recognize as liability if it is virtually certain that we will have to pay out this amount. Okay. If it is probable, let's say for example the insurance company is only probable, then we will disclose as contingent asset. Contingent asset. Okay. If it is probable, a probable liability that we may have to pay. For example, in this case, if basically the legal action for unfair dismissal is successful and the company will have to pay out, okay, will have to pay the finance director, financial controller, okay, for this amount. If it's probable, then we will basically have to recognize a provision. Okay, if the asset is possible, then we will basically ignore. Okay, even if it is remote, we will ignore. Okay, however, if it is a possible liability, we will recognize or we will disclose it as a contingent liability. Okay, if it is remote pun, we will basically ignore. Okay, so as long as you understand this table, you will be able to answer this question too. Okay, in this case, there isn't that much detail. Okay, there isn't much detail on whether this legal action, is it possible or probable. So what you guys can do is basically explain a little bit on this table. Okay, if it is probable, then basically we will have to recognize a provision. If it is possible, this has to be disclosed as a contingent liability. Okay, so the audit risk is, has the management actually accounted for this legal claim as per IS 37 or not? Okay, are they actually doing this? Okay, and basically, what is being misstated here? Okay, if let's say it is probable and we should recognize a provision, and if the management is not doing this, basically the risk is that the provision may be understated. If it is possible and we're supposed to disclose it, then we can say that there is a risk of insufficient disclosure being made. Okay, guys? Next is basically the payment plan. They were approached by a customer requesting a payment plan to cope with outstanding balances. This customer is one of the largest. Okay, and no adjustment has been made to receivables. So this is the same concept here. So if you guys notice, this is basically repetitive juga from the previous scenario. Basically, the receivable, kan, there is a higher risk of irrecoverable debts. Irrecoverable debts, especially because this is a material amount and it is one of their largest customers. This is actually another thing that you can talk about is basically this can cause a material uncertainty on the going concern. Okay, because it may be that you are heavily dependent on this customer for your business. So they may cause going concern issues. Okay, or may cause material uncertainty on going concern. Okay, and talk about which account is being affected in this case. Okay. So which account is being affected, guys? If there is a high risk of irrecoverable debts, and basically in this case, the allowance remain at the same level, what is the account that is being affected? Hello, is everyone still there, or are you guys like asleep now after the break just now? Okay, so Mimi cakap receivable is overstated and profit is overstated. Okay, receivable may be overstated. Okay, and profit may be receivables and profit may be overstated. Allowances may be understated. Okay, next is basically the FD has informed you that they have recently consolidated some loans into one long-term loan. So it's the same issue here on the classification, especially when they have consolidated from like short-term loans into one long-term loan, they may not be accounting for the split between NCL and CL properly. Okay, and next is basically there is a right issue. Okay, right issue is also what is the risk when there is a right issue. Okay, what are we supposed to do when there is a right issue? Okay, if you guys still remember the double entry, okay, we will debit cash, credit OSC, credit share premium. Okay, so basically, are they actually accounting for this appropriately or not? Okay, it could be that they have not accounted for the split correctly. Okay, so that is the risk here. Okay, so can you guys try to do these points? Okay, just do from number 1 to number 6. Is that okay? I think it's doable, right, guys? Okay, this actually requires a lot of practice on your part juga. If you guys just look at me doing it, then you guys will not be able to actually answer in your finals. Okay, I'm not going to come to the hall and help you guys. So what I can do right now is basically ensure and confirm that you guys are doing it the right way or not. Okay, so can you guys attempt these 6 points here until the unfair dismissal point here? Okay, just these 6 points. Just do the explanation. Oh, yeah, before that. Okay, since I said that just now, like I explained just now, yang basically I did not write the ratio, kan? Okay, I'm just going to state that basically the inventory holding period increased. Can you guys take this down? Because I really don't have like the answer for this. Okay, gearing increase. Gross profit margin pun increase. Interest cover decrease. Alright? So I don't have the figures somehow. Okay, I just noticed this just now. Okay, so basically macam as long as you have this impact here, I want you guys to explain it juga. Try to relate it when you guys are writing the scenario, okay? So just describe these 6 points here. Okay, describe and explain these 6 points here. If you guys can, then try to do the auditor's approach sekali. If not, just leave it. Then we can discuss after this. Okay, so now it's 10:30. I'll give you guys more time for this. So kat sini kan, how do we calculate your time management? Okay, so for example, okay, time management is very, very important, guys. Especially when you guys are writing audit, kan. You can get carried away. It's easy to get carried away. Okay, so make sure your time management is on point. So it should be each mark is 1.8 minutes. Okay, so 16 marks. Cuba korang calculate how many minutes should I give you guys? Okay, 16 times 1.8. Basically, it should be 28.8 minutes for this entire question. But right now, I'm asking you guys to just do the explanation, right? Explanation and basically just for 6 points. So I'll give you guys 20 minutes to do these 6 points here. Okay, is that all right? So we will discuss at 10:50 with your explanation. Okay, I'll look through your answers. Please submit it to the Padlet. Okay, see you guys at 10:50 with your answers. Hi guys, now it's 10:50. Please submit your answer to the Padlet. Okay, time is up. Okay, let me try to mark. Actually, kan, it should be that you guys should be able to attempt the auditor's response juga sebenarnya, because it's actually quite similar to the one previously, right? Which if you guys notice, some of the points are like just similar je. Okay. Okay, let's look into Najwa's answer. Edit post. Wholesale customer have 40 days during which any return can be made without penalty. The FD feels that this is unnecessary and has removed the provision. Okay, this is 0.5. Then the next point. IAS 15 revenue states that provision on the return rate should be made. If there is no provision being made, this will overstate the sales and understate the provision of return rate. Okay, I think this is also a 0.5 mark. Okay, so the exact term that you should actually write is refund liability. Okay, instead of you cakap provision, okay, this is basically the same thing, it's on refund liability. It's just that the term is different. So actually they should be recognizing a refund liability instead. So that's the only thing that you can fix here. But I like how you presented it in a way that is very clear juga. Okay? And you have basically like tried to just like cut down on the explanation very straight to the point. Okay, so this is 1 mark there for the first point. Company purchase pattern for which was capitalized. Okay, this will result in intangible asset and profit being overstated. Okay, so one thing that you have not kind of like talked about is you did not really relate to the economic useful life of 5 years. Okay, so in that case, this depends on the examiner if they actually want to give you marks here or not. Okay, because this is a bit general because you didn't explain that the economic life is 5 years. Okay, so basically I would say that, okay, I can still give this 1 mark. Tapi I would say that macam depending on the examiner, okay? Okay, because you macam not complete that. You should say that the pattern should be amortized over its useful life of 5 years. Okay, that is basically how you can fix it. Let's try to fix this sentence here. How I would fix it is basically, okay, what I would do is maybe as per IAS 38, as per IAS 38 intangible asset, the pattern should be amortized over its useful life of 5 years, right? If the company did not account for this, then basically the amortization expenses will be understated and intangible asset overstated. Okay? So maybe I'll like take somebody else punya answer juga for the next few points. Okay, let's look into siapa pula Yeah, let's look into this person here punya. Sekejap I have to macam mana I nak save? Kenapa dia tak nak save dia macam leceh sikit because I macam cannot mark here. But I will mark this a bit later lah, okay? I ambil points yang senang like this, okay? For me to edit immediately. Okay, so just now kan, we were here. There has been new machinery purchased to manufacture this product. This was purchased and installed on 1 October. And the cost include installation and training costs. Okay, that is the 0.5. Okay, so kudos to you because you actually memang macam use my presentation way. Okay, on the actual exam, you tak payah tulis expensive and explanation dengan implication like this. But this is basically for your own reference lah. It would be good to break it down like this. So it's very clear for the examiner juga. Stated that the costs that are not directly attributable should be excluded and should be expensed off. Okay, so this is 1 mark. This is very good. Okay, next, Orlando has conducted an inventory review. Okay, if the inventory adjustment has not been properly valued, the inventory account may be overstated and the expenses may be understated. Try to be like more specific. Talk about the specific product line satu. And the other thing is you didn't mention about, another thing that we can talk about is the ratio. Okay, if I actually go back to the question pun, I think I had to state that the ratio has basically, the inventory holding period has increased. So we should bring this point here, okay, that the inventory holding period has increased. This may also be related to this point here, okay, that the product lines are not selling well, okay, and then basically the inventory holding period is also has increased. This may indicate there is an obsolete stock. So inventory may be overvalued. Okay, I think that macam you macam tak berapa apply. Okay, so I think I will give it a 0.5 marks. It's a bit too general, I would say. So itulah. Okay, it's very important to apply terus to the scenario. Okay, next is the financial controller was dismissed. There is a risk of fraud in the accounting records. Implication is not sure. But okay, this is a good attempt. There is a risk of fraud, and maybe the risk is basically the risk that this fraud, the impact of the fraud, is the explanation is that the risk is that the fraud is not being identified and resolved on a timely manner. So the financial statements may contain material misstatement. Okay, so this is a good attempt. Okay, siapa ni Ain. Okay, thank you Ain. So good attempt. Okay, so nanti maybe I'll try to mark your answers in like more specific lah. Okay, this one I want to just like cover more ground and maybe like look through more people punya answers. Okay, so let's look into Amrit's answer. Orlando sells, okay, feels it is unnecessary. Okay, feels it is unnecessary and has removed the provision. This indicates the revenue and profit to be overstated and refund liability to be understated. Okay, this is correct. I can give this point, this first point here, 1 mark. Okay, sorry, I cannot like scribble on it. I have to like save it after semua so leceh. So this one I can give it 1 mark. However, overall, okay, another thing that you guys can add in this point, okay, which ratio can you guys connect to this first point when we're talking about IFRS 15? What ratio can we relate from what we've calculated just now? I mean, technically we didn't calculate. I mean, like from the ratios that I gave you guys too, what can we relate juga? Okay, so GPM. Yes, you guys are correct. By the way, kalau you guys like write in the chat, write je lah to general. I feel like everyone is like direct messaging me. Okay, so yeah, the answer is GPM. Okay, so we can talk about how the GPM kan has increased. Okay, so you have to bring this into the scenario. It may be, okay, when we see this GPM increasing, we see it as a good indicator. Okay, macam, oh, the company is performing well, apa semua, that's why the GPM increased. But it may be that the GPM increase is actually due to this overstatement of revenue here. Okay, bring this into your answer. Okay, this is basically where they akan actually, okay, let's say, for example, your results is 49. Okay, right now sekarang 49. Okay, sakit hati, right? It's heartbreaking, right, to get 49. Yeah, I don't know if any of you have actually experienced it, but I personally have friends who have gotten 49 and yeah, sakit dia kan. Okay, so what will basically cause the examiner to kind of consider whether they should give you that 1 mark to allow you to pass or not is this, okay? How can you professionally apply the ratios that you've discovered and calculated in your audit risk question? This is also something that can help you in that 1 or 2 marks yang will actually cause you to pass or fail. Okay, so do not try as much as you guys can to include this within your answers. Okay, and discuss with FD the rationale behind the decision. Okay, this is correct. However, you can try to like again, when we are explaining the auditor's response, we have to explain what is the purpose of this. Okay, the reason why we want to discuss with the FD is to assess the reasonableness. Okay, we discuss the rationale behind this to assess the reasonableness. Okay, next, the company purchased a patent which was capitalized as an intangible asset. Okay, okay, so this is also 1 mark. Okay, good time, Amrit. Thank you guys for submitting your answers. Okay, maybe I'll just pick like 1 more. Okay. I'll go to Irdina. Okay, so let's look through the last few points here. Ni tadi punya. Oh, ni Darjeeling. Okay. Okay, let's look into this one. Okay, so we were talking, we stopped at the paint products, kan? The financial controller was dismissed after it was alleged that they had been creating fraudulent transactions. Ni macam you tak sempat complete, okay? But basically the last point here, risk of irrecoverable debt may cause going concern issues. the receivable and profit may be overstated, allowance may be understated. Okay, this is one point. This is one mark, but maybe you can basically explain in more detail. Okay, terang gila guys my life. Okay, so maybe you can just like do a more detailed explanation on your own revision. Actually, if you guys buat answer plan for my class ni kan, just do simple je. Tak payah pun nak make the full sentence pun is fine. Okay, because this is just practicing in class. But if you guys have extra time, then just do so lah. Okay. So okay, I want to show you guys my answer now. Alright. So we can basically just look through my answers and discuss on the correct treatment of this. Okay, I hope that you guys can along the way do your own correction. Okay, again, thank you guys for everyone yang actually submit their answers. So for the ones yang I terlepas, I'm so sorry, but basically I will try to take my time lah after this to mark it since you guys dah susah-susah. I really appreciate the effort also on your part. Okay, so let me open it side to side. Okay, so this is my answer. Okay, basically I talked about what we should do, which is I think most of you guys actually already got this correct. Where we should recognize revenue up to the amount the business does not expect to provide a refund. Okay, a refund liability should be recognized for the estimated returns. And then I bring in the fact that the GPM has increased, which is an indicator that the revenue may be overstated. There is a risk that the refund liability is understated and revenue is overstated. Okay, so like Amrit said just now juga, we discussed on the rationale of this estimated return rate of 10%. Okay, so here, I want to be very clear on the auditor's response. It is usually we are questioning what is already within the scenario. So I want you guys to be as specific as possible. Okay? Don't just say discuss with finance director on the estimated return rate. Be very specific that we want to discuss why is it 10%. This is what we are basically using the information within the scenario as much as we can. Okay? And basically we want to assess the reasonableness. And next we want to obtain a breakdown. Okay, maybe we want to look into last year punya returns. Okay? Because we want to know what is the reason why it excluded this return rate, right? So we can obtain a breakdown of prior year, post-year, and breakdown of sales returns, and any sales return documentation such as credit notes issued to assess the reasonableness of FD removing the provision of sales returns. Okay? Basically, we want to just assess last year punya claims, how much? Like that. Okay? So far so good, guys? Okay, are you guys like doing the correction or are you guys just like, but whatever it is, I think nanti I will just I will give you guys my answer plan after class. Alright, for these two questions. So the next is basically the pattern, right? Okay, we have to be specific. The pattern should be amortized over its useful life of 5 years. Okay, as it was purchased in September 2004. Okay, another thing is sometimes they give you guys these dates for a reason juga. So we have to try our best to apply what they give us. So right now dia punya financial year end is 30th September. Okay, they purchased in September 2004. So it has been 1 year. Okay, basically they should account for the amortization expense of 100k as at the year end. So basically their intangible asset balance should be decreased by this 100k. Okay, if you guys are not sure, basically we just go back to the double entry of an amortization. We will debit amortization expense and credit your intangible asset, right? Okay, if they are not doing this, then basically there is a risk that amortization is understated and intangible asset and profit are overstated. Okay, so either one of these auditors approach will actually give you guys 1 mark. Okay, but again, try to give as much as you guys can. Okay, a tip for you guys who are like not so sure, macam mana nak remember these points kan? I think that as the most important is basically for you to hafal the subject matter. In this case, we want to obtain whatever supporting documentations relating to this pattern. Whenever we buy an intangible asset or we buy anything pun, there will usually be some sort of agreement, contract or invoice. Okay, so we want to obtain this to confirm the useful life of 5 years. Okay, and basically we want to review the final valuation of pattern. Okay, usually the final valuation, they akan detail all the opening balances until the closing balances. We want to ensure that this is accounted for correctly or not. Okay, next point. Okay, it's the same point. If training costs were strongly capitalized, PPE and profit will be overstated and expenses is understated. Okay, so again, while I'm going along, can you guys pun like did your answer plan too without the auditor's approach? So maybe along the way, you guys can just add the auditor's approach to your answer. okay, we discuss with the management the correct treatment. Okay, basically another thing that whenever the company had done something wrong, okay, from the scenario, this is actually a bonus point for you juga. Okay, why? Is basically we can use the point of discussing with management. Okay, basically we discuss with management what is the correct treatment. We cannot just discuss. This has to be paired with confirming that it has been actually done or not. Okay, we discuss and we confirm that they actually do it. Okay. Next is we can, whenever we purchase pun kan ada purchase invoice. So we can look into the purchase invoice to confirm the valuation of the machinery cost. Okay. Another thing, I think my answer pun not as specific. Obtain and review the purchase or invoice for the machinery purchase to confirm the total cost is actually 225k, is it? 225k. 225k. Okay. So, alright, so this is basically how I basically, for this point here then, because we will basically, our automatic response is we want to say IS2 requires inventory to be measured at lower of cost and NRV. Okay, if I were to say just that, we will actually not get any points though. We have to explain this lah. Inventories may be obsolete. Okay, why? Because the inventory holding period has increased from how many days to how many days. Okay, this can be an indicator that inventories are obsolete. So in accordance to IS2 inventories, the paint products may have to be written down to the lower of cost or NRV. Okay, if no adjustment is being done, there is a risk that inventory and profits are overstated and expenses are understated. Okay, so this auditor's approach here is something yang I want you guys to remember also. Okay, this is a very repetitive point when we are doing audit risk. For inventory, it's always the same issue, so the auditor's approach is always the same juga. Basically, we will talk about detailed testing to confirm the NRV and the cost of all the paint product lines, and that on a line-by-line basis, inventory is valued correctly. Okay, so the next point here is on the fraudulent transactions. Okay, so this is our favorite point, right, guys? We can basically use the same thing again. Okay, the impact of the fraudulence. Another thing that cakap investigations has been launched, but it is yet to be concluded. That means the impact of this has not been fully discovered yet. Okay, so the impact still cannot be fully determined and measured. Hence, there is a higher risk that the financial statements may contain unidentified material misstatements due to fraud. Okay. Alright, it's the same point. We maintain professional skepticism, and then a suitably experienced audit team should be allocated, and then educate time to obtain understanding. Okay, so for this point, if you guys still remember kan just now I showed you guys the table. So I'm not sure if you guys explained according to that table or not. Okay, try to explain according to what IAS 37 states. Okay, I stated that in accordance to IAS 37, if it is probable then that it will be successful, a provision is required. If it is possible, a contingent liability should be disclosed. If this is not done, there is a risk that provision or disclosures are insufficient. Okay, basically the most important thing when there is an unfair dismissal is, okay, what can we do, guys? Can you guys just give an idea of what can we do if there is a legal action? For the auditor's response, what can we do for legal cases? Okay, if there is an unfair dismissal, I think the most reliable audit evidence is we will basically review whatever correspondence between the between the company, between Orlando and the lawyer or the legal advisor. Okay, Ain cakap discuss the reasonableness. Okay, I would say that when there is a legal action, whenever there's a legal action, we will basically we will try to relate and ask the legal advisor. That is actually the most reliable point lah. Okay, so that's what I said here. We review correspondence between Orlando with their lawyer to understand the likelihood of the financial controller winning the case and the amount of payments to be made to them. Okay, and Mimi also said inquire the advisor, the legal advisor, on the likelihood of litigation outcome. So this is okay also. Alright, again, whatever you guys want to say, make sure to remember to include the purpose. Okay, here one, the purpose is to understand the likelihood of the financial controller winning the case. Okay. Next is the famous point, which is basically repetitive from the last time, right? Major customers with material amounts. owing has requested a payment plan to cope with outstanding balances and no adjustments are being made. So we relate to the ratio again. The receivable collection period has increased, right? Okay, so if basically if they are unable to make the payment, there is a higher risk of irrecoverable debts, and then we can talk about how this can affect the going concern. Okay. So again, whenever there is a receivables issue macam ni, we will look into the aged receivables report and then discuss with credit controller. So this is one point, okay? This goes together. We cannot just review the document and actually not do anything. Because if we just review, dia macam nothing is changing from it. Okay, so it should come as a pair, okay, with something else. We inspect this document and then what is the action we do after that. So basically in this case, we will discuss with the credit controller whether these allowances are adequate or not. And then we will basically perform an extended post-year-end cash receipts testing by reviewing the cash book and bank statement to confirm whether the amount that the customer owes, have they actually eventually made payment or not. Okay guys, so far so good. Okay, we're almost done. Okay, I know that macam it's getting a bit late, so I think everyone is like already like dah barai, right? But it's okay, we're almost done, okay? I'm so proud of you guys for going through with this, especially for those young are working. I understand the struggle. Okay, so the next is basically the consolidation. It's the same issue. Basically, there is a classification issue here, right? There is a risk that loans may not be classified accordingly into NCL and CL. And additionally, there is a risk that no disclosure are being made on this consolidation of loans. And the thing that you guys can see is also on the interest, I feel like. But in this case, because they didn't really mention on the interest rate, so it's a bit harder for you to relate later on. So I only talked about the classification issue and the disclosure. Again, we want to recalculate the split and review whether disclosures have been made. And obtain and inspect the loan agreement to confirm the terms of the consolidation of the loan. Okay, so the last point is, again, whenever there is a right issue, then we think about what is the double entry, right? Debit cash, credit, OSC, credit, SP. So the risk is here, I said that the right issue may be like they are not calculating and accounting for it correctly, okay, between OSC and SP. Or there is a risk that right issue has not been disclosed in accordance with accounting standards and local company legislation. So the share cap, so this is the impact. Share cap and SP could be misstated. Okay. So what we can do is we can recalculate the split. We want to check whether the disclosures are adequate. We can obtain legal documentation relating to rights issued. Okay, to agree the number of shares issued and the rights price. I think another point that you guys can include, because we have debited cash, maybe we can actually look into the cash receipts. Okay, review cash receipts on the rights issue. Maybe we'll try to word it properly lah kan. The audit team should perform cash receipt testing to confirm that the amount received from the rights issue has been received accordingly. Okay guys? Okay, so I will basically send this answer to you guys. Okay. So maybe macam tomorrow what we're going to do is we are going to go through hardcore. Okay, hardcore, and I think I'm going to add on another 2 additional questions. I'll try my best to upload the questions before. But hardcore, I hope that what you guys can do is look into the scenario yourself, so that today, because it was the first day, so I wanted to give you guys more time to kind of read through the scenario in class, because I'm sure that some of you guys are working and or maybe you guys have not actually gone through the scenario. Okay, so for tomorrow punya class, I hope that you guys can actually read through this, and basically your homework right now is to look through this question, okay, highlight whatever points that you guys found from the scenario and create your answer plan. Okay, so tomorrow what we will do is basically just discuss more on the answer plan, so hopefully we can at least complete 3 questions tomorrow. Okay, so explain the benefits of audit planning, describe 8 audit risks, and explain the auditor's response. Okay, so I hope that you guys can highlight and create your answer plan. Okay, answer plan yang kotak-kotak ni lah for your auditor's risk and auditor's approach by tomorrow, so that tomorrow we just tinggal discuss je. Okay, maybe we'll do another 2 more questions also tomorrow, hopefully, if we have time. Okay, so now it's 11:20. I think that I'm just going to end the class a little bit early because I think that if we were to look into this question right now, I feel like we won't have enough time also. Okay, guys, is that okay? Can we end our class? And then tomorrow, hopefully, we will come back more fresh and then hopefully attempt more questions compared to today. Okay? So, alright, I hope that you guys are okay with that. And basically, I will provide the answer plan yang today juga. Okay, maybe in Timba Flex. So nanti you guys can just look into Timba Flex and do your own answers. Yeah, maybe I WhatsApp je lah juga, okay? So do you guys have any other questions from me before we end our first class tonight? Did you guys learn something from this? Like, you guys kind of see a little bit, walaupun we've only done 2 questions, do you guys see the structure of it a little bit? I feel like when you don't have the structure in answering, kan, that's where it's easy for you to kind of like melalut or go astray with your answer. But if you follow the structure, basically, there will be like a clearer flow in your answer. Okay, so that's basically the most important point, I would say. Okay, if you guys don't have any other questions for me, I'm just going to stay in case anyone wants to ask. But I'm going to end the class. Thank you so much, you guys, for joining my class today. And it's nice meeting you guys. Sorry if I did the kurang. If you guys have any other questions, don't hesitate to ask me. Okay, thank you, Iman. Nice to meet another Iman. All right, thank you, Ain. Good night.